right, now we're going to have some life lessons. Does anybody happen to own a house? Okay, perfect. Have you learned anything about financing a house in another class? Just for my reference. A little bit, yeah? Okay. Well, sorry if this is repetitive then. I want to make some parallels between financing a home and the financing that you get for a wind project, because, well, number one, it actually will be useful for you, and I think it's a little bit more tangible as well. So we're going to talk a little bit about principal and interest payments, which I imagine you could probably figure out pretty easily on your own, and then also discuss something that's maybe a little bit more foreign, but it'll hit you all of a sudden, is tax write-offs, which you will want to have. You will pay attention to that in just a couple of years. What you can write off on your taxes, and the difference between write-offs or deductions and credits, because production tax credit is one thing, whereas a write-off is another thing. So we write off our interest, and you do the same thing on projects. So we're going to just take for an example a $200,000 house financed at 4% over 30 years. How much are interest payments in the fourth year? That's going to be like our guiding question. Do we have enough information to figure this out from the class? Yeah, I mean, well, of course, you could go into the spreadsheet and do it that way. You know that there's functions in there. Can we do it with the calculations that we have? What do we want to use? Let me add, what equation do we want to start with from your notes? Anybody know? And what would that get you?
That's going to get you the future value of the money based on how much it's going to compound to through the payments.
Is that helpful? I believe that you can derive that into what you need here, but from the lesson there is a specific equation that breaks down the percent of your payment for the total lifetime of a loan. Anybody remember what that was called? You can be looking it up, it's fine. Anybody looking? 3 letters. Or you can tell me the whole name. No, not MPV. Starts with F. Fixed charge rate. Thank you. Yes. Now I can move on. So fixed charge rate, or FCR. Okay. Equation for this is R over R plus 1 to the L minus 1 plus R. So R being that interest rate, 0.04. And you always have to use it in decimal format. If you just plug in a 4 in this equation, it won't work. It has to do with the plus 1 and the minus 1. It just won't come up with something reasonable if you don't use it as a decimal. And L is the number of years. So this tells us if you multiply this number by $200,000, that tells us our total payment we have to make in the year. It's going to be the annual number. It's that simple. So anybody want to tell me what you get? I'll write this out. And just like I usually give you some hints so that you can do a reality check, this should come out a little higher than R. Anybody have a number?
0.05?
Yeah, 0.05. I'm going to take it, I think I got 0.058. Anybody else? 0.058, okay. Yeah, you don't want to take too much off that, because that will make a big difference. The difference between 0.05 and 0.058 is big. All right, so simply your annual payment then is just that times $200,000.
In 1 year, your annual payment would be $160.
Oh, sorry. Not 0.58, sorry, I made that. Let me go back. All right, so make sure you caught that 0.058. 0.058. Better? Yeah, you'll never buy a house, that's right. Okay, so this was, and just for the nomenclature's sake, this was total installed cost. I'm relating it back to our nomenclature from before, times FCR. That's what we did here. This is 11,566, yeah? Okay, so it still sounded like a lot, but then divide that by 12. That's not so bad. For a $200,000 house, it seems within reach, yeah? Start making money. This is the only point I'm going to mention monthly. I'm just trying to relate it back to something more meaningful for you. You pay rent on a monthly basis, so that's the only reason why I'm doing that. We're going to stick to annual from here on out, though, okay? What part of this is interest? You guys probably have credit cards. You might know how they operate. Similar manner. On an annual basis, they're going to take that interest rate and multiply it by the amount due, right? So the interest is just what? 4% times 200,000. Your balance on your principal, which at the beginning is just $200,000. Now we're going to be interested in just this interest piece because interest is something you can write off of on your taxes. And that's going to be a piece that we need in our balance sheet on our wind project. So that's why I'm showing you how to do this. It's also something I write off. It's probably the biggest write-off I have on my taxes every year. I think we pay like $14,000 in interest, and you're going to see it goes down every year as you start to pay off your loan. That's a huge write-off. The federal government could make it any year. They could say this isn't a write-off anymore. That's how it works, though. But this, you basically take that off of your income. So that's why we're calculating this. So it's just 4% of $200,000 is, so interest, I'm just going to say 200K is 8,000?
Yep.
Okay, so the difference is how much you're actually paying down your loan. So that's called your principal payment. And then this is of interest because this is a real expense in a wind project. The amount that you have to pay to the bank from the loan that you've made to them. And you'll see that in the balance sheet for the wind project too. Principal payment on debt. This is your debt part. So it's not like a tax write-off, but it's a real payment you have to make. You don't necessarily have to pay your investors every year. Just like if you put money into the stock market, there's dividends, and let's just forget about that. But you put your money in the stock market, you don't ask for your return every year. You get your return when you get your money back out, right? So the equity part doesn't have a payment associated with it every year. So principal payment is just your total payment minus your interest. And that's just $3,566. And then, so that you can move this forward into another year, you got to look at what's your loan balance now at end of year one. So it's just 200,000 minus 3566. So unfortunately, even though you paid $11,566, you still owe $196,434. But the consolation prize is that you get to write off $8,000 on your taxes. So that's the good news. Yeah.
Isn't usually interest adding on the payment? Why are we subtracting it?
So we calculated the total annual payment using this multiplier. Okay? Then it's very easy to figure out what portion of that is interest. And this is actually how they come up with this calculation. I'm going to show you in Excel. This is exactly the same as the functions in Excel. All right. So does that make sense? So when you get your first loan, this is what happens. Yeah. So you're going to pay this much total out of your own pocket for your home each year. $3,566 in this first year is, this is every year. Every year, and this will not change. This number doesn't change. In this first year, you're going to pay $3,566 towards your principal, and in the first year, $8,000 of that is going to interest, and this interest is tax deductible. So if you make $100,000 and that's your tax basis, subtract $8,000. Now you're being taxed on $92,000. Literally, that's how that works, a deduction on your taxes. It reduces your taxable income. Deductions reduce your taxable income. And then everybody has different tax rates. So for instance, if you're in the 100K tax bracket, I can't remember what rate you're taxed at, but let's just say it's 28% perhaps, then basically you're getting cash back on the order of 28% of this number. So it's not like you get the full amount, but the more and more and more you bring down your taxable income with various write-offs, the more you're going to get a check back from the government at the end of the year from all the taxes you paid. So that's why people are always looking for write-offs. Same thing goes for wind projects. Absolutely the same thing. But they're also writing off interest. They're writing off the capital, which depreciation, which I think we'll talk about a little bit later. And then there is the tax credit. Tax credits are different. So if somebody makes $20,000, somebody makes $100,000, but they both qualify for the same tax credit for having kids, for instance, you both get the same tax credit. It just basically is subtracted from your taxes. It doesn't have anything to do with your income or your tax rate or whatever. So tax credit is simply deducted directly from your taxes, not your taxable income, your taxes. So it's more directly seen as a credit. So is that clear? This is just like tax law 101. But it all has a lot to do with how wind projects are financed and actually make sense, is how all these things come out. All right, so save. Let me show you one more thing. Change this. All right, so I put in our example here. $200,000 house, 4% interest rate, 30 years. Fixed charge rate, we already calculated. This is our annual payment. If you use the payment function in Excel, which just asks for the rate, which was 0.04, and each of these are on an annual basis. You could do it on a monthly basis. Then you just divide the rate by 12, and you multiply the number of periods. Instead of being 30, it's 360. And PV is your principal balance. So I don't know if anybody's used the payment function in Excel, but this is PMT. This is the exact same thing as FCR times total installed cost times your principal balance. Okay? This is where that comes from. So now let's just step through the scenario of you got the first year of your project, you're paying $11,566, or first year of your mortgage. $8,000 goes to interest, $3,566 goes to principal. The remaining principal is this value. Second year, payment's the same. Payment never changes. But these two break down differently. First, let's calculate interest. Interest is always 4%, because that's your interest rate, of your remaining principal balance. So instead of taking it times $200,000, it's this number. So this is always going down. Interest is always going down, right? But your payment's remaining the same, so your principal's going up because it's the balance of the two. So it's just the difference between those two. And then remaining principal is just this number minus that number. So you're paying it down a little bit more. So each year you pay off a little bit more and more and more and more. Yeah.
So is that why if you pay off more right from the beginning, you undersell?
Yeah, if you add more principal to your payments each month, even $50, $100, the more you can add, you actually pay off your loan a lot quicker, and overall you'll pay less interest. It helps a lot. So some people will try to fit in actually a whole extra payment within the year.
The earlier you do it, the effect is compound.
Yeah, if you do it earlier in the loan, it helps. But not everybody's able to do it. But it makes, if you can buy just a slightly more affordable house for you and then make extra principal payments, you can make a big difference. So, like me and my husband just refinanced to a 15-year mortgage. It saved a couple of years on our, like going from like 20 years to 15 years. No, did we do 15 year or 20 year? I can't remember. Anyways, we saved a couple of years by doing that. So, totally shifted the balance of what the payments are and everything. In fact, if I just change this number to 15, you can see payment's going to go up a lot, but you're paying still the same interest. So you're putting a lot more towards principal each month, but the payments also went up too. So, anyways, a little useful information for a couple of years down the road. And we will relate it back to wind as well. Okay,